Welcome everyone that has already joined online. I see there's about 15 of you. So as usual, I'm going to wait about 2 minutes, see if the numbers go up a little bit, kick off with an introduction, and then we'll invite our guest speakers on after that. So just hold tight for a minute or two and we'll see if we have some more people join us. Okay. I'm not going to wait too long this time. Normally I give it about 5 minutes, but I wanted to reach at least 20 people and then kick us off. I'm not going to waste too much time on an introduction today because we have 4 very exciting guest speakers waiting backstage. And I'm excited to dig into all of their content, introduce their funds, and start chatting about some early stage VC funding. Thank you everyone for joining. We really did think that this one was going to have a big turnout. So I'm hoping more people join along the way. But I'm going to kick us off. So we're at session 6 of the webinar series. I really hope you guys have been enjoying it. I know the last one with Wayne from the UTF and some of the TTO representatives was really well attended, and we got great feedback from that. A few of you had follow-up questions from that session, which I have gotten back to this morning. And I'm in contact with Wayne speaking about a bit of a follow-up session and answering some of your additional questions. So I am aware of that. If you have any more questions, feel free to email them through to me. And yeah, so without further ado, today we are speaking about early stage VC. We, of course, want to try and be a little bit more specific in the deep tech biotech space, but we have 3 different funds we'll be speaking to, so hopefully a broad perspective. Awesome. So, sorry, one sec. There we go. One small favor, the feedback form. There are not many of you who have completed it. As we mentioned in the beginning of the series, all we ask for is a little bit of engagement. We really need you guys to let us know what is working, what isn't, any suggestions you would like for future sessions and for next year's program. Please let us know. I'm going to drop the link in the chat during the session. And I'm also going to send you a follow-up on email once we do our cohort update. So please look out for that. We'd really appreciate it. And it just helps us understand what you guys want in the future. As I mentioned, next will be, so first up, we have OneBio Venture Studio. Nick and Marco will be chatting together about the fund and a little bit of their perspective of everything evolving in their space. We will have Rowena from Africa Health Ventures, a short break, and then Francois from Savant will join us. After this, everyone will come back on stage for a short open Q&A with all of our guest speakers. But in the meantime, all of your questions can go in the public chat as usual. I'll ask some questions to our guest speakers individually during their session, but keep all of your main questions to the end. But just keep them coming. You can pop the questions in at any time. The session is recorded. Just a reminder, we'll give you the link in our follow-up email. And we will also try and send all the slides that we've had during the series to you shortly. I know some of you have requested that too. Cool. So our guest speakers, once again, just to show you their faces before they come on. Nick and Marco from OneBio Venture Studio, which is now actually, OneBio Fund Manager. And then Rowena and Francois from Africa Health Ventures and from Savant. Kicking off, Nick, partner of OneBio, now fund manager. Nick is a co-founder of OneBio. He works across company creation, fundraising, and commercialization. His interests span therapeutics, synthetic biology, and agricultural biotech. His business partner, Gian-marco, call him Marco, is partner at OneBio. He's a venture builder. He's involved in venture building, investment strategy across health, agriculture, and environmental sustainability. And he has really interesting previous experience in the UK with a startup, Gyroscope Therapeutics, and at the Cambridge Malan Institute. So I'm going to call Nick and I'm going to call Nick and Marco on stage. Rodrigue, if you can pop them up. And I'm going to give me 1 second. There we go. Hi, Nick. Hi, Marco.
Good
Two
morning.
of you in the same office. Looks great. I saw you got all dressed up for the session too. Looking very dapper, the two of you.
Thank you.
Very kind.
Yeah, we usually dress
So
like us.
of course, of course. So I'm going to let you guys kick it off. I know that we have a lot to get through with everyone else, so I'm not going to waste too much time. I'm going to hand it over. Give us an intro to who you are, who OneBio is. You can explain the whole ecosystem, and then really a perspective on the funding landscape, how it's evolved during your time, where the fund is going, where it's at right now, and some interesting trends or perspectives you'd like to share.
Cool, thanks, Hannah. Appreciate it, and as always, it's good to be back on the series. We're going to be chatting a little bit about why we started OneBio and who we are, as well as some of the trends, as you mentioned, Hannah. So maybe just to start off, you've given us nice introductions to ourselves, but maybe just to chat about why we built OneBio. OneBio was initially ideated in 2018 along the premise that we create really good science in South Africa. We consistently ranked in the top 30 countries if you look at Nature and science publications or high impact journal publications. There's really good science going on in South Africa, but very little of that was being translated into companies. So we looked at the different ecosystems around the world that get this right, that do really well at this. And we found that there were three sort of main components to these ecosystems, which we felt made them work. The first being good science. And as I've mentioned, we have that. Specifically here in the Western Cape, there are obviously a lot of universities within a relatively small geographic area. UCT ranks in the top 100 universities in the world pretty consistently. And we have, I think, a number of others in the top 500. The other elements that we felt were missing at the time that were present to other ecosystems was a support network or things like co-working spaces, things like incubators and accelerators specific for biotechnology, and then venture capital funding. These are in the ecosystems that thrive. These are in abundance. So if you think of Boston, think about 4 or 5 different co-working lab spaces within the city of Boston. And then there are, I think, about 150 venture capital funds in the Boston area alone. At the time, there was not one venture capital fund dedicated to biotechnology in Africa, and there were no co-working lab spaces. So we set out to kind of correct those areas or the gaps that we saw to hopefully create an ecosystem that thrives. And we set up the OneBio Innovation Center in 2024. That's a co-working lab space and office space if you haven't been. I'm sure Hannah's spoken a bit about it in the past. And in 2019, we did a first close of a fund, actually a final close of a fund. It was our first fund. It was a relatively small fund, around about the $6 million mark, $5.5 million, so just under 100 million Rand. And we began investing that fund into early stage startups. From that fund, we made 11 investments in total. We've got one profitable exit to date, and the other companies kind of range from thriving to struggling to raise money, as most venture capital funds have that kind of distribution of success. Since then, we've also launched the OneBio Venture Studio, which is why we now call ourselves the OneBio Fund Manager distinctly, and we'll chat a little bit about exactly what it does. But essentially, why we built OneBio to start with was we believe that it's important for Africa to contribute internationally to biotechnology and entrepreneurship. We felt we had the most difficult element, which is really good science, and we felt it was in our reach to build the other two elements. And this is obviously a work in progress. We are working to still prove out the point that we can create really world-changing companies from Africa. In terms of how we invest, we obviously provide capital. We're a venture capital fund, so we invest up to 15 million Rand, usually between 3 and 15 million Rand, with roughly 50% of our fund to reserve for follow-on investments. That means that we'll invest an initial check into a company, and then if that company performs really well and they do another fundraise, we may choose to do a follow-on investment into that company. Obviously, with the OneBio Innovation Center, these companies and others in the ecosystem have access to lab space. That's kind of a one barrier of barrier to entry that's been significantly lowered. We obviously provide mentorship as an investor should, but we also have quite a deep network of other mentors and advisors that we can put you in touch with. And then specifically on the network side, we well networked with other investors that may want to participate in investing in your company. We know some corporate partners, both locally and internationally. And then obviously the portfolio community we find to be pretty valuable in terms of sort of feeling like you're in the trenches with other companies and bouncing ideas and learnings of other companies. We found that to be particularly helpful. So overview of Fund 2 is we are targeting 250 million Rand, which is 2.5 times our first fund. The ticket sizes I've been through, and we're aiming to make between 8 and 12 investments from this fund. As I said earlier, initial tickets and then later follow-on tickets if the company performs really well. Hand over to Marco to chat a little bit about some of the trends that we're seeing.
Sure. Maybe before we tuck in, a bit about backgrounds. I think your experience overseas, Malan, maybe just to set it, if you want to.
Touch on that. So Mark and I both have international experience. I spent some time at an organization called Singularity University, based in Silicon Valley. And that was actually the sort of the birthplace of OneBio. And I found that international exposure to how entrepreneurship is done in other areas to be critically important. And I think Marco's got some similar experiences.
Yeah, sure. So Marco, maybe just a quick background before I tuck into some more elements we've got on the slides here. So essentially South African, but was lucky enough to study out in Edinburgh University for my master's. And subsequent to that, spent about 6 years working in early stage biotech, essentially in the UK. It was between London and Cambridge, the majority thereof. Got to spend some time with a venture build actually called Gyroscope Therapeutics, which was subsequently acquired years later for a really sizable multiple. So essentially the bug kind of caught me quite early, the idea of startups, starting with a small team, building out technologies, building out teams, essentially towards exit and towards impact. Subsequent to that, I got to work for a institute being set up kind of from scratch at Cambridge at the time, called the Milner Therapeutics Institute. Very similar kind of theme here, which was to start up and spin out more companies out of Cambridge in the therapeutics and diagnostics space. So, I haven't done anything else since, except change geography. It's great to get to work with really sharp people that are trying to build things that are impactful in the world. Brought that kind of experience home and joined the fund about 4 years ago. We were still in the process of deploying our Fund 1. And as Nick has now mentioned, we are now have already gotten to our first close in Fund 2, so we are making investments currently as we continue to fundraise. But maybe now to tuck into some more of the meaty elements, what we're finding exciting, what's genuinely hard, and maybe a couple of points of where we see founders go wrong most often could be helpful. So essentially, one of the themes that we find very exciting about doing what we're doing here, and we mention it to most founders we speak to, is we don't want to be competing necessarily on technologies where there's an advantage elsewhere in the world. For instance, we don't want to be going toe to toe with a spin out of Stanford in a particular area that we don't have a competitive advantage to kind of challenge that thinking or that technology and kind of be the front runner. So one area that we find quite appealing and exciting is this idea of bioprospecting. So in South Africa, we have unmatched kind of plant biodiversity, animal biodiversity, marine species biodiversity from a genetic standpoint, biochemistry, looking for molecules, you name it. We have this innate diversity on the continent and in South Africa that can be used in biotech, company formation and technology development. So we find a couple of companies fairly regularly that are working in that space, and we think it's interesting. We're seeing a growing pipeline of technical founders. Nick mentioned you have top performing universities, not only in the Western Cape, although we do have some very good ones in the Western Cape. We do work with founders from WITS, from UP, from UKZN, you name it. But we do have some really kind of promising prospective candidates, prospective founders, those scientists that have worn a lab coat for a time, as most of us at OneBio have at one stage or another, but are wanting to build a company, not necessarily wanting to be academics or finding a kind of day-to-day life sciences or related function. And then rising LP appetite for African life sciences exposure. Essentially what that means for those, there's a bit of VC jargon in there, but an LP, a limited partner, someone or an organization that looks to write checks into funds themselves rather than directly into startups. So these are the kinds of organizations and people we and I'm sure the funds you're going to speak to later look to raise their capital from. And we are seeing an increased interest in the idea of building world-class biotechs on the continent, which is great to see. What's genuinely hard in the same breath, the local LP base is still fairly small. So raising capital into a fund from local LPs is challenging. We've been lucky enough and have worked hard enough to have done quite well on that front. But what that means is we need to focus our attentions into finding and engaging with and building trust with LPs internationally. to get to the kind of fund sizes that we're currently targeting. And that's hard. It's a long road. It takes time. You need to build relationships, build trust, and really showcase you guys, prospective founders, the current portfolios of companies, both ours and others, biotech companies on the continent, in order to kind of get LPs to gain conviction. Biotech timelines are longer than typical 10-year fund cycles. So essentially, if you take the example of a traditional kind of therapeutics company, let's say a small molecule company, from target identification right the way through to kind of phase 3 trial data coming out, that can be a 10-year plus journey. As opposed to, an area in South Africa that's been fairly hot over many years in the VC space, something like fintech, for example, that kind of road to ROI and revenue and success, quote unquote, at its various stages is a lot quicker. So we need to convince LPs that are patient with their capital. You'll hear that term mentioned quite a lot. And that we ourselves, our modeling is that bit longer than other fund structures. In terms of follow-on ecosystem, it is quite thin. So again, we're a pre-seed and seed stage fund. We invest early and we build companies with the knowledge and the intention that many of these companies will definitely raise money after us, right? At a seed, Series A, and beyond. And on the continent currently, that ecosystem that's looking at biotech specifically is very, very limited. So again, essentially founders face a similar challenge that we face currently in terms of building networks with international now VCs to back them at the later stage. Not unsurmountable, but is a challenge. And then in terms of what founders get wrong, there are a couple of points here. Obviously, this varies, but kind of thematic areas that we see fairly periodically. Underestimating the development timelines and raising too little capital. Obviously, runway and running out of runway and your burn rate are elements of starting a biotech or a company anywhere, a startup anywhere, that are really important. And I think especially within the sciences, R&D often takes longer than planned. Anyone who spends some time in a lab realizes, you don't often get it right the first time. What that means in terms of now cash burn, and therefore the time you have to meet a milestone that you can then really showcase to justify your subsequent raise, ideally at an improved valuation. We see periodically founders who get that maths a little bit wrong and maybe don't stay as on top of it as they could do. Pitching the science and forgetting the commercial story. I think, again, most of us have worn a white lab coat at some point in our careers. We all are scientists at heart. We love seeing new data and something interesting that is biochemical or genetic, you name it. And it often forms the core of a biotech company, yes, but communicating the commercial impact that if this is now successful, through additional R&D, getting a product to market even later down the line, telling that story is hard for a scientist who hasn't done that before. Hence, Nick mentioned we spend a lot of time in mentorship and coaching, putting people in touch with others who are good at presenting the commercial aspects and still have the science. And there's an art to that. And it takes time to develop that skill, which we try and support our founders with. And then waiting too long to start fundraising. Fundraising is tough. It is a very tough exercise, I think, for everyone. It kind of ties into burn rate and runway, just ensuring you have sufficient time, even to raise a seed round. Banking on 6 months to a year to put a decent round together is not uncommon. So we've seen a couple of companies who maybe run that timescale down too far before they really are engaging with prospective investors. And maybe take that a step further, that essentially a startup should never not be fundraising. Yeah. You're always trying to build relationships with other VCs. It takes a long time for someone who doesn't know you on the company, especially someone maybe not based locally, to build trust in what it is you're doing and see that you are fully committed and that you're making progress. So I'd almost encourage people to continuously be fundraising, soft fundraising, or might it be? Brilliant. So what we touch on now, we've mentioned, I think we've mentioned the 3 organizations pretty well, or the 3 groups within OneBio. The third group that has come online fairly recently is the OneBio Venture Studio. So essentially, this is our venture build capacity within OneBio. So I'll just give a bit of a high level of what we define as venture building, and maybe touch on some past experiences of. So a fund traditionally, as we've discussed, is a pre-seed and seed stage fund. Once a company is incorporated, structured correctly, its team is working well together, pitching materials already, data rooms. There's a clear business plan and a vision, and it's kind of ready for VC money. That's where the fund or a VC fund traditionally steps in. Right? That's where we'd get involved and see if we could participate with a check. All the work before that is vitally important to have a very VC backable, exciting opportunity for a VC, ourselves and others. And that work is essentially where our venture build team takes on a lot of that challenge. So essentially working with prospective founders who maybe don't yet have an idea, but they're very keen to build something and they need a lot of help and support to get there is one avenue. Working with founders that already have the beginnings of a company that needs a lot of tailoring and a lot of support to get it VC ready, as well as our own ideation. We all have ideas about prospective companies or themes, fleshing those out and seeing whether there is a VC backable opportunity there and finding founders who are equally passionate about it to come in and run it. All three of those scenarios can play out within the venture builder. So essentially, we've been fortunate enough to raise our first grant facility into the venture studio, around a 20 million rand grant facility through the SASME fund and the DSTI respectively. Essentially, building out companies. So starting from day one, the idea and putting it together. The hopes there being you can spend a lot of time with a group of experts to put together the most compelling business case possible that's VC backable in a nutshell. The intention here is to do 2 to 3 companies in the first 12 months of this program. We have 3 entrepreneurs in residence that are essentially leading and driving this program alongside Nick and I, and they are the expertise that help on a day-to-day shape these companies, build these companies. Essentially, we've got a couple of ideas kind of simmering on that front for the moment. One, an interesting piece of technology from the ICGEB that we're looking to potentially put together a venture build in the prostate cancer space. Marine bioprospecting. Actually, one of our EIRs has got a passion for this area and has found some compelling pieces of data here locally that could lead to a marine bioprospecting play. African genomics is a space or a theme we've found really interesting since kind of day one. And we are looking at a particular venture in that space. And your ideas, if you are a prospective founder who's not yet got a fully baked business plan, pitch decks ready to go, if you are one of those, the fund is always here and willing to engage. But if you're kind of at the inception point, ideation stage, and you're looking for support and help, the venture build facility is probably a good fit for you. And I'm sure ourselves and the EAR team would be happy to have a conversation.
I think that's us.
Yeah.
Yeah. Hannah, back over to you.
Awesome. Thank you, guys. Thank you for the overview, and I appreciate including the perspective on where the funding landscape has come. I'm going to ask a question from previous conversations we've had with the cohort, and then I see that Stephen's asked a question in the chat, which I will get to in a second. Just given your guys' experience starting up OneBio, this really exciting journey, obviously starting these 3 entities and understanding how this model can work together. If you did rewind back 5 years, I mean, we've kind of, at least I've heard mixed reviews about how this early stage funding, specifically what's available to deep tech biotech space, whether it is increasing and whether it is showing kind of fast progress. If you had to reverse 5 years when you started OneBio and looking now, obviously one of the major assets is OneBio growing and looking for these LPs and growing the ecosystem. But what can you say kind of some of the major trends and shifts have been? Is there increasing capital available in this space at the early stages? Is it increasing fast enough? And then also maybe some commentary on whether you think the ecosystem development of the resources and maybe the community that's growing, if you are from a funding perspective, seeing that have an impact on what capital is available, if the ecosystem is starting to get some of that kind of incentivizing capital to come into the space.
Yeah, good questions. I'll maybe start with the kind of to rewind time. When we started OneBio in 2018, there was a lot of money around, and it was very easy. Well, I say very easy, relatively easy, certainly compared to today, for companies with a good idea and 2 good founders to raise, $2 or $3 million seed rounds based on an idea. I think COVID sort of put a bit of a dampener on that, and the ecosystem's been really, really tough since then. So what we're seeing is companies at the early stages to raise sort of international capital need to be a lot further along and have a lot better data points than they used to. The idea of having an idea and raising money on that, I think those days have been made to be a lot more difficult these days. That said, I think there's a bit of a recovery happening at the moment. We sort of COVID's far enough in the rearview mirror that I think that the sort of money allocators, the LPs, are starting to invest a little bit more heavily and sort of more diversity in a geography perspective. But that said, some of the sort of geopolitical developments over the last couple of years, with the pulling of USAID, has left massive funding gaps in parts of the world, including largely in Africa. So there are these macro trade winds that seem to be at your back one day and then kind of in your face the next. And I think the trend that we are seeing is that there is a cooling off of the sort of negativity and people holding on to their capital. There is an increase in wanting to spend money into emerging economies, but it's slow. There's definitely globally a more inward-looking attitude towards capital allocation. What will our capital as a government's DFI or whatever it may be, what will it do for our country, has become a lot more pronounced. But I do think that there are still opportunities out there, and I think that there's somewhat of a softening of that and a sort of evolution of the manner in which these big asset allocators are allocating their capital. So look, we're hopeful and we're in conversations with a number of international LPs at the moment who are positive about what we're doing and positive about the ecosystem. And then maybe just touch on your second question. I think Mark will probably have some thoughts as well. But this idea of the ecosystem that we're building here, fundraising for a fund is the same as fundraising for a startup in a lot of ways. You have to tell a story and show the data points and show the ability for whatever money you raise to be spent and used in a very meaningful way. And I think that with the growing ecosystem, with the work that the OneBio Innovation Center is doing, the work that the Venture Studio is doing, and the fund manager, we are creating an ecosystem which is fairly compelling. The story of what we're doing and the interplay of these three organizations, I think, is a pretty compelling story. So I think it is very important and has been very helpful in our fundraising so far.
Awesome. Marco, anything to add?
I think you covered that really well, Nick. And essentially the long-term horizons of this, I mean, we think we've explained, fund horizons of 10 years, potentially 12 at a maximum. The story, it takes a long time to build a compelling story. And the real outputs, I think, for capital allocators that would be kind of no-brainers, potentially to start investing more locally are success stories and wins. And what does that really look like? I mean, essentially, it's return of capital to investors. So I think we're showing an ecosystem that is growing, and the early stage companies are raising early capital and are starting to build. But the real kind of signals, or the strongest signals possible, will be large exits on the continent in the biotech space in the next 5 to 10 years, giving investors in that next cohort of funds the knowledge that this does happen here. We do speak to a fair number of international LPs, and you'd be surprised at the number that turn around and go, "What? Biotech in Africa? Where?" It'll take time for that story to become more solid in other regions, and we're here to do that for the long haul.
Awesome. So I'm going to leave hopefully we get some follow-up questions to that kind of perspective and what we're seeing evolve, and we'll leave that for the open panel at the end. Stephen asked, in terms of runway, what do you as investors deem as appropriate salaries for the founders during the early stages, either as an absolute value or as a percentage of runway capital available? Who determines or negotiates this? Is this entirely at the discretion of the founding CEO, or are you active investors with some veto power during these early stages?
Yeah,
it's a good question. So maybe from a nutshell, the way we tend to invest is through instruments like safe notes. We sometimes would take a board seat. Other times we deem it not necessary. So ultimately, it's the founder's decision, right? What we try and instill in our founders is obviously being prudent. We all have to put food on the table and have a roof over our heads. But at the inverse of that, overly bloated salaries will limit your runway. So it's a fine balance between that. So it'll all depend on the size of the round that you're raising, what it is you're looking to achieve or need to achieve in that round to raise a subsequent round. And with that calculus, figuring out what's most prudent and what makes the most sense. So unfortunately, I don't have a percentage there for you, or a high level stat, what is deemed appropriate. But I mean, think about it in a way of a next funding round, or maybe still other investors in that same round would obviously have a look at your data and look at your budgets. And something that they'd probably peg it to is, what does a scientist, or maybe you have a business background, what does someone of your profile generally earn outside of a startup space? That's somewhat of a guide, right? If you're proposing to pay yourself 4 times the going rate of someone at your career level and in your sector, that might be a red flag, fairly understandably. But if it's kind of within keeping with norms, that's probably the best place to land yourselves.
Maybe just a little bit to add there. What we often see is the founders of a company who are obviously incentivized through their shares in the company. We want that to be the driver. You don't want to invest in a company that people want to make a whole lot of money from their salaries, who are also the owners of the company. That's not the point. The point is to increase the share value that the founders own, the shares that the founders own. So the incentivization should never be around salary. It should be, in my view, the salary should be the minimum for founders and equity holders that is available for them not to have to worry about money all the time and putting food on the table, as Marcus said. But they certainly shouldn't be wanting to get rich off their salary. That's really not the point of a startup. The point of a startup is to grow the value of the company. In terms of what we often see founders of the companies earning sometimes half of what their employees earn, because the employees aren't incentivized unless they're an ESOP structure, but aren't as incentivized as the founders who own the majority of the equity. So often you sacrifice your own salary to be able to pay the best people in the world to come and work for you. And we've seen that on a number of occasions. And that is a very positive green flag. People are not wanting to extract money from a salary, but they want to build value internally. So I think that's the ethos we'd like to paint. But there's no set figure that we have in mind. It's are the incentives correct? And generally you can get a bit of a gut feel from looking at the kind of the pay grades of the different employees and founders.
Great, thank you. Stephen, if you have any follow-up questions, you can keep popping them in the chat. Oh, you did say very helpful. Thank you. There are a lot of questions coming through. Please keep them coming. I do have my eyes on the chat, but I think that a lot of them are really nice questions to pose to the whole panel. And I think a lot of these will be similar questions that'll come up for the rest of the guest speakers as well. It may be interesting to get a perspective from the different funds. So I'm going to introduce Rowena and Nick and Marco. Nick and Marco, thanks so much for your overview. We're going to put you backstage for a second while we hear from Rowena, and then we will bring you back on for the rest of the questions in the panel. One moment. So Rowena will be joining me just for a short introduction before I hand it over to you for a little bit more of a background. Rowena is managing partner of Africa Health Ventures. She's an investor, entrepreneur, and software engineer with 20 years of experience scaling healthcare innovations in multiple different countries. Africa Health Ventures invests in high growth businesses improving health for the next billion. Rowena, thank you so much for joining us.
Thank you, Hannah, and thank you to OneBio for organizing this session. It's great to see everyone here. Thank you for the introduction, and I guess I should just dive in.
Yeah, I'm going to switch over to you so you can go for it and give us a bit more of an introduction yourself.
Sounds great. I thought that was a pretty good introduction. I'm based in South Africa. I've been here over a decade at this point, but as you can tell by the way that I'm I'm originally from Canada, originally trained as a software engineer, and I caught the entrepreneurship bug during my time studying in Silicon Valley. So my background is as an operator, as a founder, as an executive. I did my first startup as a telemedicine venture in West Africa. And that experience right out of graduate school for me was really cemented my belief in the catalytic power of early capital. That first conversation I had with a surgeon who told me that this business makes sense and backed me, I think really set the course for the rest of my life. And it's one of the reasons why I'm such a believer in the kind of work that all the entrepreneurs do, and also the work of the funders that back those entrepreneurs. Since then, my next startup was an MIT spinoff. We built something like a Salesforce-like enterprise platform for healthcare use cases, and that gave me the experience of deploying in 40 countries on this continent. Everything from medical records in Ethiopia to supply chain solutions in Senegal, pandemic response in Uganda, and other examples like that. So as we'll get to it, I hope that gives me some perspective on what it takes to build and roll out healthcare systems, which is what we invest in as Africa Health Ventures. And then I made the leap from operator to investor shortly after 2020. COVID was a big year for us. We weren't sure if it was going to make or break our business, but it turned out being an incredible opportunity for us because we'd built a lean technology at world-class standards for Africa, and then saw massive adoption in the United States, across multiple states in the United States. And that was really our breakthrough in terms of profitability and in terms of hitting our growth and revenue metrics. So there's an interesting case study in there as well about dual market technologies and how they expand. But since I left that business, I've gone all in on equity investing in early stage businesses, particularly in Africa, and focusing on the healthcare space. So, as Hannah notes, today I'm the managing partner of Africa Health Ventures. We are an emerging markets venture fund investing in high growth businesses to improve healthcare for the next billion. We have OneBio that invests in biotech. We have Savant that invests in deep tech. And on our side, we invest in healthcare. And each one of us brings our own expertise about the area that we work in, which extends across our portfolio, across our value creation, and even across the teams that we assemble, in our case, an operator network of founders, exited founders, both in Africa and abroad. I'd say one other aspect about our fund that I'll pull out is, in addition to bringing that operator perspective and hopefully being able to provide some perspective and insights on market entry in various African geographies, we do have more of an international base, also in terms of our investors across 4 continents as well. And so we're looking for those world-class opportunities, even though we're investing exclusively in Africa.
Sorry,
in terms
Rowena, I just wanted to ask, are you sharing slides? Are you meant to be?
I'm not sharing slides.
Okay. No, I'm just checking. Everyone in the chat was asking if you were meant to be. They thought that you were clicking through, but not speaking to them. Go ahead, continue.
Yeah, I can pull up something if that would be helpful. Just get the...
No worries. I think everyone's just was wondering if they were meant to be seeing something.
Okay, then I'll just talk through it, but happy to take
Yeah.
questions afterwards.
Go for it. Sure.
Certainly. So what do we invest in? In terms of the verticals that we invest in, the standard names are health tech, biotech, med tech, as well as healthcare financing, supply chain, AI. The way that I think about it as we look at our deal flow in our pipeline is we invest in dollars, we invest in diagnostics, we invest in distribution, and we invest in drugs. So on the dollar side, we invest in the market that needs to exist for healthcare to work and to be profitable in Africa. So that's the umbrella under which we do healthcare financing. We invest in diagnostics because we believe that AI-enabled diagnostics are reaching a new frontier everywhere in the world, and particularly here. We invest in the distribution of essential medicines and medical devices and supplies across the continents. And we invest in novel drugs and therapeutics with a certain angle on that. But the idea being that we can build better drugs that serve Africa as well as the rest of the world. A bit about our vehicle. So we are a private, independent VC fund, and since this isn't, since this is an earlier stage audience, I'll clarify what that means. We are a private investment vehicle. We take other people's capital, we inject it as equity into businesses, and we are seeking a return on that investment. It's surprising how many founders maybe don't understand the dynamics of what that means, but certainly we are investing in businesses which we expect to 10 or 100x our investment over the course of our fund life. And at the same time, as a healthcare vehicle, we have an impact agenda. We're looking at number of lives affected. We're looking at improvements in access and quality in the places that we work in as well. From a stage perspective, we invest in pre-seed and seed. So we're also working early stage, as I believe OneBio and Savant are as well. And then from a geography perspective, we look specifically at companies that are targeting African markets and beyond. So you can capture a global market, you can go after the whole picture, but in our case, because of the nature of our thesis, we need to see that you are active in South Africa or Nigeria or Kenya, or you have a clear, route to market plan for those geographies. I know that's not true for a lot of funds, but it is something that is particular to our fund, and a reason that we will screen someone out early on, regardless of the team and the product and everything else that they bring in. To share an example of one of the investments that we made, so we invested in AI Diagnostics, which is a digital stethoscope in order to, as its first go-to-market, detect tuberculosis earlier than it's been detected before, to screen for tuberculosis. And for us, what we saw in that opportunity is the stethoscope is a universal symbol of medicine. It's in every doctor's office. It's used to diagnose respiratory, cardiovascular, gastrointestinal disease, and it hasn't changed in hundreds of years. So we believe that is going to shift. And the question that we looked at when we saw that opportunity is, why can't that come from South Africa? Within the diagnostics umbrella of our overall investment thesis, there is an overall space of how can AI be applied to physical data sets, to radiology, to dermatology, to pathology, and how is that going to necessarily have a leap forward in the next 2 years, never mind the next 7 years and the next 8 years. And this is an example of that, digital stethoscope capturing those frequencies, in the lungs and creating a data set that no one else has. One of the things that I thought was particularly compelling about the proposition is that it also afforded itself to the unique fact that it is based in South Africa. So for better or for worse, obviously with downsides, but South Africa has the largest tuberculosis burden in the world of any large country. And that makes it a unique place to build this data set and to tackle tuberculosis first. And so it's an area in where the fact that it comes from South Africa makes it more competitive than investing in a similar business in Boston or in the United States. And then finally, from a consumer perspective or a client perspective, the status quo is a sputum test requiring reagents, go to the laboratory, turnaround times, supply chains. Why bother if you can just detect disease based on the sound of your lungs? So it was a technology we could understand very quickly that has massive market opportunity and it has applicability across multiple disease areas. And they've done really well since we invested in them a few years back. Let me dive this. That was sort of like the snapshot of our fund and how we're structured and what we look for. Maybe a few other points that I'll hone in on in terms of what we actually look for when we invest, to provide a little bit more color that you might not get on our website or other materials that we have out there. Obviously, when we invest, we're looking for a healthcare linkage. That's a starter for our fund analysis. When we look at returns, because we are investing at pre-seed and seed, because we know half our portfolio is going to go to zero or basically zero, it means we need to see high returns from the investments that we're making. So we need to see that at minimum 10x, much better if it's 100x return on the investment that we're making. And so when we're looking at a deck that presents the market opportunity, it has to have those kinds of economics, or we can't participate, even if we love the technology and even if it would make a good business that other types of funding might be a fit for. But for us, we can't participate. The structure of our vehicle is the most common structure of venture capital funds on the planet, which is a 10-year fund life plus the option of 2 years extension, which means that when we look at a deal, we need to see the possibility for us to recoup our capital within that 10-year fund life. One of the things that we do, and again, we don't invest exclusively in biotech, but one of the things we are more interested in is the option of flipping technologies early. So we're not necessarily going to stick with you through the whole commercialization lifestyle, but you might come up with an innovative data set. You might come up with an innovative drug candidate that you're not bringing through phase 2 clinical trials, and that you're going to exit, to another investor domestically or abroad, or another strategic corporation, and that works with us and our economics. But it is something that we look for when we do the investment. And then a last quirk, which is specific to our fund, is that we are U.S. domiciled in the United States, and that is because we cater to an international investor base across the United States, across Europe, Asia, and Africa. And so it makes it a little bit easier for us to work with an entity that has a US or a UK or a Swiss domicile. But we have invested in a South African domiciled entity in the past, so at least we know the ropes for what that means. But that is a constraint that you'll come up against as you speak with various funds. More broadly, speaking of what we are evaluating when we look at biotech or deep tech innovations, there's 3 hurdles that you need to overcome and demonstrate. So for some of the other investments that we look at, it's only the commercial question. Is there a market? Have you met the market? Are you seeing traction against that? And then, with a lot of biotech and deep tech, we also need to see, for the novel science that you're doing, have you de-risked the science that's associated with that? Have you climbed that mountain? And then even after you've climbed that mountain, do you understand the regulatory path that you are pursuing? For us, because we are not biotech or deep tech specific, because we are a generalist in that sense, and most funds in Africa are generalist funds, it's easiest for us to understand commercial traction, the commercial opportunity, early signs of interest, early conversations with potential buyers, business partners, acquisition targets, that's that where there is a budget that is willing to pay for the thing that you're building. And that's easier for us to wrap our head around than some of the deeper science and some of the constantly changing regulatory pathways that we navigate when we look at these kinds of deals. But I think it's a useful framing, those three mountains to climb. First, commercial adoption. Second, scientific novelty paired with de-risking and validation. And then the last, the regulatory piece.
If I can jump in with 2 questions that were asked that maybe fit into what you're saying now. In the chat, we had some questions about your current due diligence process. What do you break down? What do you look for? And then just some commentary on which science-led opportunities are hardest to assess. I'm not sure if you need more context on that question, but
I might need more context on the science question, because often I have the privilege of the founders bringing the science to me. We go in with an open mind. We invested in a natural language processing model company, and I'm not a natural language processing expert. And so it was a lot of education for the founder towards what is the opportunity here and how can we reach it and what does that look like. So we don't come in with a predisposition on what kind of science that we're going after. I think it's something that we leave to the founder, both to demonstrate, both to educate us on what is the science, as well as how does it lead to the market opportunity. I'll also add, in our case, because we're not tied to South Africa, we're tied to Africa. But again, our investor base is international. We are looking for world-class opportunities that can be best built here. And so there was something about even what Nick and Marco were talking about what is the kind of innovation you would expect to shine in Africa, even if there's fewer VC funds here and fewer kinds of funding here. And so this question of, they call it bioprospecting, and that aligns. Like, there is something about the the flora and the fauna and the diversity of assets of molecules and assets that are available here, that I believe are defensible globally and make the healthcare investment proposition in Africa particularly compelling. So I'll leave it at that on the science side, unless there's a clarification on that question.
Yeah, I'll prompt, I think it was Adrienne in the chat. You want to give us more context on what you're asking there. But then a question that does actually follow on from what you just said now. What causes LPs to reject African opportunities? What do you kind of see the most pushback for, from your LPs with specifically African markets?
That's a good question. I mean, in our case, we have an African vehicle. So anyone who is invested in our fund is already sold on the Africa opportunity. And so those are the perspectives that inform how we built the thesis and how we structured our investment committee. So in terms of my day to day, now that we've closed the fund, I don't have to pitch the Africa story. Certainly other investors that haven't invested in Africa, a lot of it is a lack of understanding of the continent. You know, I invest in China. I go to China all the time. I invest in Switzerland. I go to Switzerland all the time. I've never been to Africa. I don't know what's there. And there's a lot of misconceptions about the opportunity. This may be less applicable to the biotech audience, but certainly the more educated investors also have concerns around the currency, and currency volatility across many geographies on the continent.
Perfect. The questions are coming in, but I'm going to let you continue, and I'll ask them as we go into relevant sections.
Yeah, I mean, maybe I'll just call out two last things and then happy to field questions. But first, in terms of engaging with us and what that process looks like, the best way to do so is through our website. So you can engage directly, whenever you're ready to fundraise, but even if you want to get early feedback, on something that you're working with. But you should say that when you submit your thing, it's at africahealthventures.com/apply. And you can upload, and all you have to do is upload a pitch deck. We intentionally keep it a very low threshold to participation. So if you have a pitch deck already, it should be a 2-minute effort. And then we can very clearly and quickly give you feedback like, oh, this isn't within thesis, or we should have a follow-up conversation. So that's the best way to engage with us. Certainly, I know in the real world, it certainly doesn't hurt to go to an event, for you to pitch, at a conference, for you to explain what your thing is, and to do it in terms that a generalist can understand. OneBio brings their biotech expertise, but if you can take your science and make it clear, this is a massive market and a massive healthcare upside, that just makes it easier for us to understand what's going on. But I would encourage you, even if you are not an extrovert, to make the time to get yourself known in the right circles, because it is a lot easier to make time for a 30-minute conversation or an hour conversation at a conference than it is waiting through the 1,000 pitch decks that we have every 3 months. And then the last thing that I'll throw out is we do publish a monthly newsletter that includes funding opportunities, jobs, investments that have closed, as well as funds that have closed. And one hack that I wish someone had told me earlier is that when a fund closes, that means they're typically allocated capital and are on the clock to allocate capital within a year or 2 or 3. And so if a fund announces a close, that means it's a good time to knock on their door and say, hey, I'm here, this is what I'm building. And they're a higher probability target of actually having capital to be able to invest in what you're doing. Let me pause there and take any questions.
Awesome. Thank you so much. To everyone in the audience, keep your questions coming. I'll get through a few of them and then keep the rest for the panel at the end. Jonty asked if you only invest in medical devices that have a diagnostic component or focus.
No, thank you for asking that question. I appreciate it. Our mandate is broad. So as long as there is a healthcare linkage, we can participate. Like we could participate in a nutrition venture. We could participate in a medical supplies, transportation. We're looking at one which is a cold chain, portable refrigerators for vaccine and food, cold chain, that kind of stuff. So as long as there is some kind of linkage towards improving healthcare for African markets, then we can certainly have that conversation. We're just more proactive in diagnostics, in supply chain, and in healthcare financing.
Perfect. And then from a talent perspective, Ricardo asks, where are we seeing the strongest health tech talent hubs across the continent?
That's a good question. There is a push happening, particularly, South Africa, I think, has a lot of incredible work going on. So, and certainly there are very compelling success stories of companies from South Africa. For example, Hearex merging with Lexi Hearing, which is here from South Africa. So that's a hearing aid diagnostic that is now a global leader in hearing aids, and was recently, last year, capitalized with $100 million. And other examples like Rapid Deploy, which is a emergency response set of tools that was acquired by Motorola, all coming from South Africa. So South Africa, as noted earlier, has a great educational system, has a very entrepreneurial market, and I think there is a lot of interesting things happening here. Also, I would add, Kigali is being held up, and a lot of resources are going into Rwanda as a kind of health tech hub, and certain kinds of policy initiatives there, which are bringing entrepreneurs that are active elsewhere to Rwanda to do their work. Egypt is a very well-developed market. Novartis has been manufacturing in Egypt since the 1960s, and the volume of the markets it's much more established, and there's a lot of manufacturers and distributors and a robust ecosystem around healthcare and healthcare investing in Egypt as well.
Okay, yeah, we've been hearing a lot about Kigali too. Do you also invest in animal health tech or only focusing on human health?
We only focus on human health. But sometimes there are cross linkages, so something that is good for animals can also be good for humans, but if there's no human linkage, then we can't participate.
Okay. Last question for now. What are some of the red flags with a pre-seed startup, and what are green lights that you like to see? What is the time frame between initial meeting or a non-confidential pitch deck, and approval?
So our investment cycle is quarterly. Our investment committee meets quarterly. That means if you just happen to get in, a month before the investment committee, then it could happen in 4 weeks. If your timing is a bit off, then it might take 3 months. But it won't take more than 3 months to get a clear yes or no from the process. There might be a bit of delay in the initial triage. So let's say 4 months from pitch deck to the actual investment side of it. In terms of red flags and green flags, so many things to say. I think one that is both a red flag and a green flag is really understanding the markets that you're going after. So in healthcare in particular, there is an unfortunate fallacy that what is good for health is also good business that someone is going to pay for. So just because something is going to save lives, unfortunately, does not mean that people are going to be able to pay for it. And so the fallacy is framed as there's a gap in the market, but is there a market in the gap? And so what is compelling is when a founder comes in and says, I know this market, I understand this market, I've sized it in not just, $259 billion for healthcare in Africa, but like this part of the market that I know I can capture and provides evidence of that traction. And that is a green flag in terms of really understanding where they can go. I think another encouragement I would give founders in terms of making your prospect an investable opportunity is aiming high. They say we underestimate what we can achieve in 1 year. So we overestimate what we can achieve in 1 year, and we underestimate what we can achieve in 10. And I often look at decks that could meet a global need, that could start off in Africa and then expand to Asia and expand elsewhere. Like if they got the funding, the science is there, the product is there, but they don't even entertain it because maybe they've never left South Africa. I don't know why, but they don't even entertain the notion of it being a global product. And if it doesn't have that 10 to 100x upside that I was talking about, then we can't participate. If your goal is to sell something only in South Africa, but then, it would have to be a very large part of the market here, and we'd have to come in very early for the economics to make sense for us.
Okay, Great. And maybe some commentary on that. You kind of mentioned that your fund can come from the commercial aspect quite well, and often you let the scientists or the founders lead you in the science aspect, right? Coming to you with a great idea. They really understand their science that backs this. How much support do you give at that early stage if a founder does come to you with a really great idea, but is maybe not really understanding the market gap that there is? Are you really looking for that from them initially, or do you kind of have some iteration space and work with founders at the really early stage to mold that into an opportunity that has a bit more market potential?
It's a good question. Unlike OneBio, we do not have a technical assistance facility or a venture studio facility. So we operate, on the management fees on the fund itself. So if we are meeting a venture and the market just doesn't make sense to us, I can make some commentary in a call. We can provide, a few bullet points of feedback, but typically we will disengage at that point.
Mm-hmm.
That said, there are many great accelerators and incubators, and this is, there's 1,000 on the continent, which I was surprised that there were so many. And a lot of them do this kind of work. What is the market? Are you looking at your unit economics? You look at your market size. I've been particularly impressed with Brain, OST Brain, and their work, as well as the OneBio team, in terms of being able to provide that kind of support for early stage startups. And let me also add, even though we are not deep on the science side, it has been wonderful collaborating with OneBio and Savant as well, in terms of getting their expertise and their intel on the biotech and on the deep tech side, as well as other subject matter experts that we pull in on an ad hoc basis when we're looking at an initial deal. But if the founder, it is essential for the founder to be able to convey to a generalist audience the value of the science that they are bringing in order to successfully fundraise. That's the storytelling piece that we all agree is essential.
Perfect. We're going to go to a break. John T, I did see your question. Rowena will be here for the panel just after Francois after the break, and I will bring in the questions at the end. So, Rowena, thank you so much for your overview. Thank you for joining us. Africa Health Ventures is really doing some amazing work. So we appreciate your perspective. We're going to go to a break now I'm going to cut our break short to just 6 minutes, and we'll be back at 11:10 for Francois from Savant, and then onto the panel. So thank you, Rowena. We'll put you backstage now, and thank you, everyone. Please be back in 6 minutes. Okay, I hope everyone is back from a short break. I'm going to kick us off with the next speaker. I really want to leave a lot of time in the end for all of these questions. Please keep them coming in the chats. Some really good questions. And I will introduce our next speaker is going to be Francois from Savant with 15 years of experience helping Savant grow from a 2-person outfit into a significant presence in early stage deep tech and hardware. Francois comes from manufacturing operations, which gives him a practical grasp of what a new venture needs to build both its technology and the business around it. So Rodrigue is going to pop Francois on stage. There we go. Thank you for joining us. There we go. Thanks, Francois. I'm not sure if you do have slides to share. You can share it from your side. Otherwise, just jump into a bit more of an introduction to yourself and Savant, and then we'll get through to the questions as we go.
Cool. Let me just quickly bring up my slides. Can you all right. Can you see the screen?
Yes, perfect.
Cool. And you can hear me fine and you can see me fine and everything is all good?
All good from me. Everyone in the audience, can you give a thumbs up if it's all good? Yeah, go for it.
Lovely. Hi, everyone. Thanks for the opportunity, Hannah and team, to participate in this webinar series. I'm here to tell you a little bit more about Savant Venture Fund 2, but also provide a bit of background on Savant and where we play and where it comes from. So let's start off with that. My name is Francois Malan. I'm the CEO of Savant Analytic and a venture partner to Savant Venture Fund 2. I come from an engineering background, worked in the manufacturing environment until 2010 as technical manager to a large factory in Belleville. I was increasingly more interested in the business side of things, so I pursued an MBA at the time, trying to give myself more business options. I also, at the same time, gave up my previous role and explored different career opportunities. So certainly looking for a career change, explore different things from management consulting to banking and other things. And then my path crossed with that of Nick, the founder of Savant at the time. And yeah, that was 2010. So I've been with Savant for a rather long time. A little bit about me personally. I live in Cape Town. I'm blessed to enjoy the outdoors and be able to cycle to work and things like that. And do something that I'm really passionate about in working in the environment within Savant. Before I get to the detail on the venture fund itself, I do want to just try and skip to the next slide, give a little bit of an overview of the Savant environment, where it comes from. So at the time when I joined Savant, it was basically Savant, or the precursor to Savant Foundry. We were a support organization working with a whole bunch of different companies, but on a light touch basis, just because we were doing a lot of consulting work at the time as well, just to keep the doors open and things like that. And we grew that portfolio of early stage companies that we were working with to the point where in 2015 we got some support from SEDFA, the Small Enterprise Development Agency, and further grew that portfolio with their support. So working with early stage businesses, helping to raise funds, get their products to market, and help them scale. That led us then to establish Savant Venture Fund 1 and Savant Fund Manager in about 2019. And on the back of that, also establish certain programs to help founders in a more structured way progress along these different stages of development, from really early stage pre-revenue ideation type of stage to where there's a proof of concept and first commercial engagement, help those businesses accelerate and scale and get onto the market, and then also venture and grow in the local market, all the way through to where businesses are able to scale into larger markets, internationalize, and flourish. And everything that we kind of do is to create a continuum of funding and support for businesses along this journey. The most recent addition to the offering, I suppose, is SAILI, which is an impact capital fund targeting businesses specifically in the green economy space that also creates socioeconomic and environmental impact. And that is run by my colleague Steve, who's the investment principal on that. You may have seen socials for our Build program. We're in the fourth cohort of the Build program, which, as it happens, is a large driver of pipeline also for Savant Venture Fund 2. It's an acceleration and investment readiness program, Pan-African program, and I'll say a little bit more about that shortly. But that's kind of the space that Savant, or the environment that Savant plays within and tries to provide support on. In terms of venture fund, and let's get into that. Savant Venture Fund 2, which is the fund that is topical and in process at the moment, is a $50 million Pan-African fund. It's an early growth stage fund, looking to deploy tickets of between $0.5 and $3.5 million. We've got a few key sectors, so focus on food security, energy, e-mobility, water, and circular economy, and geographic focus. It is a Pan-African fund, but we see the majority of our pipeline coming from these 5 countries. And the reason mostly for that, and I think Marco and Nick also touched on this, is where we see an overlap of strong academia and strong industry kick up some really interesting hardware and deep tech type of innovation. In the process of getting to first close and start deploying, probably by Q4 of this year. I spoke a little bit about the ecosystem and how our platform delivers a reliable source of pipeline for the fund. So from Savant Foundry, the Build program, Savant Venture Fund 1, which potentially provides follow-on funding opportunities, and then Venture Fund 2 itself. And a large driver of that, as I mentioned, is our Savant Build program, our 26 intake. We received 730 plus applications from across the continent and selected eventually 15, not 16 companies from that. Just speaking a little bit about the investment path, I think that's fairly standard across different venture funds, but we see different applications. There's an initial screening, some light DD, before we go to an initial investment committee to then also get approval to go into due diligence or full due diligence. The full due diligence then looks at various different things. It's a lot more comprehensive in terms of financial, legal, technical, operational due diligence, which leads us then to hopefully get to the point where we're happy to present a term sheet to the company to negotiate that. And once we're in agreement with the business, that would then go to IC, or a second IC for final approval and contracting. And then from there, there's the governance side of things. So potential redrafting of shareholders agreements and things like that post-investment, and then the ongoing governance and involvement until we get to an exit. Just to give the audience a little bit of a view on some of the things that we invest in. Obviously, we're focused on hardware and deep tech innovation. So some of our execution-ready deals, if we can call them that, is an on-site wastewater treatment technology, really interesting modular processes, which requires a round of about $3 million. We'll probably look for some co-investors in that. Some others are cooking oil upcycling, using that to create detergents. It's an African company. Need about $1 million round at this stage. We also have a modular energy storage company that's really interesting, using some alternative to battery storage mechanisms. Really interesting and needs quite a large round, but there's already some interest from other co-investors in that. And speaking about some other things also in the pipeline, solar cold chain, which is really interesting. So it's in the mobility space, so refrigeration trucks driven from solar, or the refrigeration system at least. Precision harvesting, waste to fuel conversion, methane pyrolysis to create clean hydrogen and pure carbon, alternative proteins. So you can see it's quite a wide range, but roughly across those 5 pillars that I mentioned previously. And some more, lots of pipeline to look at, so really interesting. Just a little bit of a snapshot from Fund 1. So we are in our second vintage fund. Savant Venture Fund 1 is fully deployed across 22 investments. It was a proof of concept kind of fund, about $10 million. So we did pre-seed and seed stage investments. And one of the key metrics that we're obviously tracking is a revenue growth of the portfolio company, which we're really happy with. And that's the kind of things that we're looking for from a fund level to model and track. Again, just speaking a little bit about some of the portfolio companies, some of our top performing companies, CubeSpace, Insiava. CubeSpace being a space company, Insiava is a fabless semiconductor company. SNC makes nanofibers from all sorts of different materials with various different applications. Lockstat is a graph intelligence platform using AI and other technologies. AI diagnostics is something that Rowena also spoke about. We're also an investor in that business. Sensor Networks is a smart geyser and demand side management application. AgriLogic, turnkey greenhouse control and improved efficiency. Adjuvant, also an agri-tech business. Inexor being an advertising technology business. Interesting. And a few others. So quite a wide range of different companies that we're involved in through the fund. For Savant Venture Fund 2, just speaking a little bit about the strategy and how that will likely look. We're looking at 15 to 20 portfolio companies from that fund. Remember, we're targeting a $50 million Pan-African fund. We would look to write tickets of between $0.5 to $1 million as an initial investment, with the capability of following our top performing businesses, our winners, with some additional capital, follow-on investment. So a split of, say, 60-40 in terms of initial investment versus follow-on. And these are the kind of gross IRRs that we're targeting as a fund. From a startup point of view, it's not directly material, but it speaks to some of the things that Rowena and Marco also mentioned, and Nick mentioned, in terms of what a venture fund needs to target as potential returns to be able to deliver back to their LPs again. And I think we spoke about, it will be a 10-year fund life with potential +1 on that. Just a little bit about the team. The co-leads on Fund 2 will be Kay Turner-Smith, who's got a PhD in laboratory medicine and also some commercial background, 10 years in investment banking. Tabizi is a geologist by training, but a BSc honors and also an MBA. And Nick is being the founder of Savant, with a long history of working in the early stage innovation ecosystem, and Ati as a venture analyst within the fund. Myself remaining as a venture partner to the fund, and then the rest of the Savant team also fulfilling support roles to the fund. So that's a little bit of an overview just of the fund side of things. Hannah, and you had a few additional questions for me. I don't know if I should get into those now.
I think I'm going to post some of the ones that actually have come up in the chat because they're quite good. But thank you for giving such a good overview of the pipeline that you're seeing, and congratulations on the build program. I know that you had a huge number of applicants there, so really exciting. And I think it's just interesting to see what some of the trends are, to see an overview of your portfolio and then some of the pipeline that you're seeing come in now. John T asked within that kind of the portfolio question, John T in the chat asked that he sees, I see that medtech is within your fund mandate. Could you speak to why there doesn't seem to be medtech within your current pipeline?
It is definitely within. Well, it was definitely within the Savant Venture Fund 1 mandate. So Savant Venture Fund 1 was broadly hardware and deep tech. So in terms of medtech, there are two medtech companies in that portfolio. The one being AID, AI Diagnostics, which is the TB diagnostic tool using AI and large databases of confirmed TB diagnosis to provide their solution. The other one is a medical device, an ophthalmological implant, specifically for glaucoma treatment. So those are the two medtech ones that were in our previous portfolio. We in Savant Venture Fund 2, because we've got quite a background also in working with medical device and medtech companies, we are building in some discretion, I suppose, or some freedom to opportunistically also participate in opportunities that aren't necessarily strictly within the green economy mandate that we're setting Venture Fund 2 as.
Okay, great. Adrian asked, where do your portfolio companies tend to underperform after investment?
That's an interesting one. There's obviously various different reasons that companies underperform, and I suppose the earlier stage that you invest in, the bigger chance there are, or the wider the spectrum of potential things going wrong is. We've had very few companies fail due to their tech not working. I think technology risk is always an important one, but that often, or more often than not, businesses doesn't fail for technology reasons. They fail for business reasons. Founders not being able to enter the markets that they, or the business not being able to enter the markets that they proposed that they could do, not scaling quickly enough, not being able to manufacture at the price points that they projected. Uh, Aspects like that, or IP at the last minute, and there's some really interesting curveballs that happen to a business sometimes that you really couldn't see. I mean, one of our actually that is a third medical application that we invested in, which is a what do you call this? Sorry, I've got a blank on that. Sorry, it's a scope that the guys developed to specifically help with intubations, and they ended up running into a very obscure South Korean patent that was filed 20 years ago, but meant that there was disclosure on their invention, and nobody ever saw that patent. Nobody knows about the patent, but the examining authority dug that up somehow and made it impossible for them to successfully file their patent. So you see some really obscure reasons sometimes why things doesn't work, but more often than not for technology reasons.
Yeah, well, um, commenting on something that Rowena brought up, she did give some advice on when to engage with VCs, and that's specifically when you close. That's kind of when everyone should start knocking on your door. So, with the kind of timeline of Venture Fund 2, you mentioned that within Q4, you're looking at a close. What is a good way for anyone watching, if they think that they have something that fits your mandate, what is a good way for them to start engaging now and potentially start the conversation? And what does your process look like from there?
Yeah, I think our normal channel for engagement is through an initial application through our website. So that it's a very simple form, provides the basic information about what you're working on. We receive that and screen those on a weekly basis. Thanks, Roderick. And from there, we start the discussion. But as Rowena also said, I think if you are looking to raise from a VC within the next 3 to 6 months, it's definitely time to start engaging with them as early as possible and put yourself on their radar so that they can make plans around engaging with you and including you in the pipeline. I mean, you saw in the slides already, there's 3 companies that we've kind of lined up as initial investments. We've got another 18 to 20 businesses that we're actively tracking for potential investment. So it's an ongoing process, and it's also about building those relationships with your VC, updating them regularly. VCs like to see you from when you initially approaching them, how you progress over time and how you deliver on the things that you say you're working on. And building that relationship with your VC is really important in that regard. Creates trust.
Okay, great. So thanks, Rodrigue. If you all look in the chat, Rodrigue's been popping in the URLs to the relevant websites where you can contact each fund. And then one last question before I bring everyone onto the panel. You mentioned that kind of the early days of Savant all the way back in 2010, maybe the similar question that I asked Nick and Marco. If you zoom out and look over the time that you've built out Savant and all of its different entities, how have you kind of seen this space evolve in terms of capital flow? Are you seeing somewhat upward trend. Gian-marco did mention that when they started OneBio back in 2018, it was relatively more easy to access capital. And then, of course, things like COVID and the US have affected that. But over the full kind of 15-year-ish trend line that you can paint out in your mind, what are the main things that you're seeing currently in terms of capital flow? Yeah.
Cool. Yeah, I think obviously our focus is VC and deep tech, and in that regard, I think there is an increasing recognition of deep tech and hardware as VC fundable sectors, which wasn't always the case. I think as Marco and Nick alluded to in 2018, 2019, there was a big upsurge almost in the availability of VC capital through the establishment of the SME fund, which was able to establish a number of VC funds, of which Savant and OneBio were beneficiaries of. So I think the point is that there was kind of an initial surge of available capital, but after that and through COVID, I think the momentum was lost to some extent, and now we're kind of more relying, I suppose, on the gradual maturity or maturation of the industry, and hopefully the work that was done over the years starting to show a little bit more momentum. So I mean, as with VC generally, and more speaking again to the deep tech and hardware angle that we pursue, I mean, historically VC is seen as investing in digital and web and apps and fintech and things that can that is perceived to be able to scale very quickly. But I mean, so Africa provides a different context. Many African problems, like the things that we look at, like energy and water and agriculture and waste, you cannot solve with an app. These are real problems that can only be solved with, in our view, the application of science and engineering innovation. I think that's where we focused, is to nurture and fund those companies sufficiently to make it onto the market. I think another clear trend that there is significant appetite for hardware and deep tech innovation, and then obviously funding requirements as well. It's just the numbers of applications that we're seeing for a program like the BOLD program, which is a hardware and deep tech focus program. So I think generally there is an upsurge of momentum.
Awesome. Exciting times to be around then. I'm going to ask Rodrigue if you can pop the guest speakers on stage, and we can start with some questions that I posed to everyone. Welcome back, Rowena, Nick, and Marco. So one of the questions was kind of for each of you to comment on. For each VC, what are some of the statistics on the number of initial founders that you meet, to then the number that pitch, to the number that are considered, and then who are accepted after your DD? So we want to see the slow pipeline.
I'm happy to dive in on that side. For us, we look at about 50 deals a month. From that, in any given investment cycle, we'll invest in one or two. So that means that the through rate is quite low. It's about 1% and often less than that, depending on the number of deals that we do in terms of actual hit rates. The advice I would give to founders in that environment is to treat it like a sales cycle. And if you haven't done a sales cycle before, what it means is you have your deck, you have your data room, and you just expect to throw 1,000 darts at the wall. You expect to get 99 no's for every one yes, and then it's not crushing. It's just a statistics game. You're going to get the no's, accept that, go for it, have a million conversations, and don't let any one of them crush you. Because as you can see, even between the three of us, we have such different investment mandates. And oftentimes someone will say no because the thesis actually isn't a fit, or because, someone had a bad day or something like that. And the only way to win is to play the numbers and the odds in your favor.
Awesome. Thanks. Anyone for further commentary on that from your side?
Yeah, I think, Hannah, if I may, Rowena, I fully take your point as well. And I mean, we see a similar dynamic of for instance, the build program and the number of applications that you see, and you whittle that down to eventually taking 15 companies into a program. So it's a very big funnel at the top. But part of that is also to make sure that you're memorable, to make sure that when that conversation comes along, that you are ready to engage with your investor. So the investment readiness component, being able to pitch yourself properly and um, clearly state your idea and how it works and things like that is so important to make sure that your first impression is a good one, makes you a much more likely target to proceed with.
Awesome, thanks. I'm gonna one more question around this that Jonty actually asked specifically to Rowena. What is your advice for raising capital in the healthcare space, given the context of the 2026 capital raising record that you described in your last newsletter?
Well, thank you for reading the newsletter. I appreciate it. It's good to see that it's creating value. And just for those who don't read it, we did an analysis of deal flow this year and found that healthcare funding for startups working in healthcare is worse this year than it's ever been before since this industry was born, over the past 8 years. And that's a very sobering reality to be stepping into in 2026. What is true, just before I get to the fundraising, and this is true beyond healthcare as well, is there is a stronger focus on profitability. Depending on market cycles and such, sometimes investors prioritize growth. Get the numbers in, get the users in, we'll figure out the economics later on. And right now, a lot of the generalist VCs, and this is different, for deep tech and biotech, but a lot of the sentiment in the generalist VCs is that profitability speaks well, and it means that you won't die because you didn't raise your next round. So that's one tactic that startups are taking. To answer the question directly, there are, even in that same newsletter, there are several funds that have closed with a healthcare mandate. It's surprising when there's more funds being closed than startups being funded. But there is a cycle that's happening right now because of everything that changed in the market last year, not just with USAID, but with Iran war and geopolitics and AI, et cetera. So it is a dip in 2026. I expect it'll come back out on the other side. So 1, pay attention to the funds that have closed. 2, expand your pool. Just again, it's probability. If you're not seeing enough investors in Africa, go beyond Africa, bite the bullet, go to that international conference. Don't hesitate to pitch an investor from Asia or from Europe or from Boston. And don't label yourself as the African startup. You are world-class. You have an amazing product. Pitch the idea. And even if African investment is going down, you can speak to global biotech or deep tech or other markets. So you want to expand that probability. And then in the AI space as well, there's an interesting balance of blended capital that we could get into, but there's also, grant and public funding you can tap into. One last thing I want to squeeze in on this topic, because I think it is really under discussed in forums like this, is that particularly when it comes to technology and I speak more so on the software side, but there is some applicability on the hardware as well. AI is really changing the game of how startups are born and how they grow. There is a question of, should you build a lean business with 1 to 3 people? Can you build faster than the corporate giants? Can you exit faster with an assets? We have this Base 44 example that exited at $80 million after 6 months from being founded, which is insane. And that's the kind of speed and velocity where Africa is moving faster. Our adoption of LLMs for work purposes in South Africa and in Kenya is top of the world. And there is an opportunity, because we're hungry for this innovation, to go to market and to build faster. And maybe in that environment, you only ever need to raise 1 or 2 rounds. And that really changes the economics of the business. Venture capital as an industry is built on a certain understanding of raises and valuations and returns. And that is shifting right now. And a lot of people don't realize that change is happening.
I'm going to open the floor to the rest of the panel if you want to comment on any of that.
Yeah, maybe I've got a quick comment just on something Rowena said that struck me there, which is about when you go out and fundraise, go to the international conferences and make yourself applicable to international investors. I think that's something we try and instill in the founders, that if you are building a company that's very focused on raising African VC for African problems, you might have a bit of a tough time. As we've gone through, I think, in this panel, there's not a lot of investment specifically designed for Africa. You really want to make yourself as attractive and as appetizing to as many different possible investors as possible. And I think that goes down to obviously the narrative that you tell, but also the structuring of the company is very important. Where you choose to domicile the IP holding companies and all those sorts of things become absolutely critical because there's not enough investment. Certainly in biotech, to get a company from kind of inception stage, pre-seed, all the way through to being acquired, if you're just going to look at African investors because you're telling a very African story. So that applicability, I think, is super, super, being applicable to other funds is super, super important.
Awesome. Anyone else? We're good to move on to the second one. Cool. So everyone's saying thank you very much for some great advice from all of you. Another question was for deep tech or health tech, where reaching proof of concept can require significant capital. How would you advise a founder without university lab access to get to the point of being investor ready? And then maybe a commentary on what that investor ready for deep tech or health tech might mean to each different fund.
I mean, I'll have a cheeky go at this. Join the Venture Build program, OBRC, and get some lab space at the OBRC, at the OneBio Innovation Center. Join the Venture Build team, and they'll get you investor ready. But that's a cheeky kind of plug.
Couldn't have said it better.
I mean, I was going to say the same thing, but I thought it might be hard sell coming from me too.
Well, I think
you heard it here.
Yeah.
There we go. Yeah. Anyone else? So maybe more on the kind of what that investor ready stage really looks like too.
No, I think Hannah. Obviously, if you are doing something that requires lab space and you know where to go, but more generally, I think it is certainly very, very hard to convince institutional investors or private capital to invest when there is still significant technology risk on the table, and we try and connect early stage businesses with as much non-dilutive funding as we can through applications like TIA seed fund or other things like that to try and get their technology further along and de-risk it as much as possible. It just makes it so much easier then to have conversations with commercial investors or institutional investors once you're at that point. So the long and the short is try and take as much technology risk off the table. Obviously, not easier said than done sometimes, but I think that makes it easier to engage with commercial.
What I'll add to that is it a given that you don't have access to university labs or other kinds of labs? Like obviously there's other programs, like if looking at yourself and the feedback that you get in the conversations you have, how do you create the opportunity? How do you find the connections to research funding, to grant funding, to the ecosystem that can get you the resources you need so that you're coming ready to the table? One thing I think is hugely valuable in those 99 no conversations that you have is make sure that you have 2 minutes at the end to ask for feedback so that it's not just 99 hours wasted, but you have a corpus of like 20 VCs or 20 investors or 20 philanthropists told me this thing, like maybe I should do something about it and address it in my pitch that I'm doing. And at least you're getting value from the time that you spend doing that. The other aspect I'll say, and this may be more true for generalist investors than Savant and OneBio, is that when we're investing at pre-seed and seed, the qualifications and the capability of the team does matter because we know the market changes. We expect the technology and the product to change over time. So making sure that you are able to convey your right to win and that you're able to put together the right team. Now, I know you might be just out of university, like a research associate, et cetera, but surely there's some internationally recognized professor at your university or collaborating university or some thought leader. You meet them at a conference. You say, hey, I'm starting this thing. Can you be my advisor? Can you, help me out in this way and that? And just getting those, the recognition or, making it clear you're not just some random person, but you've thought about this and you've demonstrated to other people in the industry that your science is worth something, is a useful validation that people will look at alongside the product or the science itself, particularly at early stage.
Yeah. Anyone else on that one? No? Cool. David asks if businesses and founders often will undergo pivots in the initial thesis and they go to market. So with Rowena's good example of sales cycle, how much time, change in thesis, and data room rewriting is needed between every time a founder approaches a VC to be considered as a new idea that might be investable to the portfolio and then considered?
Happy to give a go at that. I agree businesses can change very quickly, but certainly don't submit 2 pitch decks at the same time. I've had this happen, and I'm shocked that anyone thinks that that is ever going to work from a fundraising perspective. So certainly I can imagine someone coming back after 6 months. It is hard. Like it's a little, we haven't moved on one of those deals. But certainly a founder can come back and has come back after a year and said, hey, we went to the market with the idea that we had. It didn't work. We're pivoting and we're changing the approaches. And that has been quite interesting. And probably it is actually a green flag to talk to a founder who has faced the market head on, saw there wasn't a fit, and changed their product dramatically. And being able to explain it in a way that we understand your thinking. We understand that this could happen again, and you will move quickly and you will adjust to it. That's actually a green flag, because all of these businesses are going to change in the long and tricky journey to commercialization.
Yeah, if I can add something there as well, I think what we want to see is founders who are really committed to solving a problem and super passionate about solving something. What that can sometimes involve a pivot and a change of strategy or direction. But what is dangerous to come across here is that you're kind of just jumping around to try and find something that resonates, rather than having a passion to actually solve a problem. So that's the one kind of fine line between, what Rowena is talking about, which I think is super accurate, where you get a green flag from a potential founder because they've thought something through it and been thoughtful about it. On the other end of that, on the other side of that line is the perception that you are not thoughtful. You're going out with quick ideas that you haven't really researched too deeply, and you're just jumping around. So I think you've got to balance that. And we find it difficult. We've had a number of instances fairly recently whereby there've been some pivots in a team, and all the things they were previously saying are now less important. Things they were saying were critical earlier are now less important. Now there's something new and even more exciting. And then a couple of weeks later, there's something even more exciting. And what we want to see is that someone's really been thoughtful and found what is the gap in the market, rather than sort of just throwing ideas around. So there's that line to kind of toe.
Yeah, I agree. Nick, I mean, it's often, we don't invest in ideas. We invest in things that somebody has spent a significant amount of time and effort and invested their own time and effort into making something of it. So it has to at least be an engagement with the market already, and some market testing and some real thought about what they're looking to do and what they're selling you before it becomes at all interesting to us. And I think you also need to understand what stage of funder you're speaking to. So in Savant Venture Fund 1, it might have been easier for us to look at those early stage ideas, pre-revenue and things like that. Savant Venture Fund 2's mandate, unfortunately, is a post-revenue mandate. So the business needs to have convinced a few customers already to buy some of their products at the price point that they are looking to sell that at, for us to be involved or to be interested in that innovation. So also understanding your investor is really important, not just swinging between ideas.
Awesome. Maybe a final quick fire question that all of you can take a stab at, and then we'll start doing the ending. So what are what are the common problems that technical heavy founder startups make? I know we've touched on these a lot as we've gone through, but some quick fire ideas.
I can maybe have a first stab there. I think pitching the tech itself without the kind of commercial lens of where this plugs into a market and why is probably it. We all get passionate about a particular innovation, especially in the biotech space, something that's happened in a lab, in a dish. But I think the thoughtfulness we spoke to previously around pivots as well applies here. Is that yes, something can be shiny on paper or in a dish, but where that really fits into the world and where it could become you name the kind of impact you're going for, therapeutic, diagnostic, agri-focused tech, you name it, how that works and where you believe it will be a success is really, really important. So yeah, really being able to spot where your innovation is going to make it, how it's going to make it to market, examples of others who have tried and succeeded and others who have tried and failed can often show that you've really looked at this particular sector and try to learn lessons from others who've come before as well. So yeah, pitch the commercial applicability in addition to the tech.
100% agreed with that. And I'll add as a follow-on to that, although I think that was the key point, an understanding of the economics of the product that you're developing. I hear a lot of pitches of this thing is going to be cheaper. And that in and of itself is not necessarily the most appealing thing. You don't necessarily want a race to the bottom. Like there are markets you can access that way, but it's just like understanding the economics of the product that you're selling and the business that you're building.
Yeah, I think, I mean, we see that really often working with engineers and scientists, the guys get so excited about their technology that they want to tell you all about the technology. I mean, ultimately, your customer is not interested in the underlying technology. Your customer is interested in the solution that you're presenting them. So that is the thing to convey and to make very clear to your potential investors, well, why the solution is better than another solution specifically for the customers. And that understanding is also important, and you only really get that from engaging with the market and getting justification from the market that the market accepts it by being willing to pay for that.
Great. Thank you so much. I think we're going to end it off there because I have some updates for the cohort that I'll need to get to. But as usual, to everyone watching, if you do have additional questions for any of our guest speakers, please email them to us, to our team, at our info email. Rodrigo will put it in the chat in a second. Ask any additional follow-up questions you have, and I'll be happy to forward them on and get you some more answers. Thank you to our guest speakers for joining. I think it's really valuable to have 3 different funds and see the similarities and the different perspectives. And see some exciting momentum, I think, locally. So yeah, really, really appreciate you sharing your perspectives. Thank you. I will let you all hop off now while I do the outro and upcoming events. And hopefully we'll have you on another session soon. I think.
Thanks you. Thanks, Innovation Center.
Cheers. So to close us off, I just wanted to give you a reminder about our next session. Our next session will only be on the 16th of September, where we're going to dive into IP a little bit. So really understanding the basics and introduction to intellectual property. We'll have 2 IP attorneys who will be explaining some of the different instruments available to protecting your IP. And then we actually decided for the session after that, so the second session in September, we have a bit of a gap, and we actually want to hear from you what you found. What have you found interesting during the series? Is there something you want repeated? Is there something we haven't touched on, or a topic we have touched on, but different guest speakers that you would like to hear their perspectives? This is your opportunity to let us know what you would like to see next. So you can either tell us in the chat now, or you can email us at the info email with some of your ideas. Let us know what's been working. If you fill out our feedback form, we'll also be able to draw some ideas from there. But we didn't really want to shove another theoretical heavy webinar session here, which might not be relevant to everyone. So yeah, this is your chance to help us shape the series a little bit more. And we're excited to see what you guys want next. Some upcoming events that we really want you to be aware of. We have an online startup stories session coming on the 28th of August with Cape Bio. Daniel, the founder, will be joining us. Then we have more startup stories throughout September. We'll have Bionuclex Research, Altera, and Biomine Health in October. An external event happening in Stellenbosch that we wanted to shout out is the Cape Health Tech Connect. That's going to be really interesting. Last year was a great event. There's a lot of very interesting pitches. Some investors are there. We will also send the link with more information about all of these events, including Cape Health Tech, to all of you via email. And then the Meet Your Co-founder, we postponed from August. We'll be doing it on the 23rd of October. And we are extremely excited about this. I think it's going to be really a unique event. And we hope that it's going to bring some energy to the space and connect you with some like-minded people who you could potentially build a venture with. So keep your eyes out for that. We'll be sending out more information very soon. And then the long-awaited next Biotech and Beers that everyone has been asking about will be the 13th of November. It'll be our last one for the year, so definitely our biggest. We will be having it at OBIC again. So keep your eyes out for that link. And that is all from us. So please, if I can ask you to fill out the feedback form and give us some ideas for that September session, we would really appreciate it. And then that is all from us. I'm just going to put this feedback form link in the chat once again. Thank you for joining us. We had a really good turnout. I hope you found it interesting. If you do have questions for any of our guest speakers, any of the investors, or if you would like to hear from some other investors in the space, let us know. We're always looking for new guest speakers. So awesome. Thank you all. Cheers. Have a great day.